All right, everybody, this is John. Let's take a look at the S&P and Nasdaq indexes for day trading and just kind of some classic things to look for. So one of the key things I like to look at is the 8:45 a.m. Central. And every time I'm saying here is Central, kind of a lot of times what will happen is whatever it does in 8:45, it then does the opposite. So in this case, rallied in 8:45 and then sold off. And then another classic kind of reversal time frame is the 920 to 940. This one was a little goofy because we kind of popped right into 920, but then ultimately sold off, made new lows, and then this was a fantastic move. We caught this in the room using call debit spreads, where we just kind of walked our way back up to the highs of the day. Kind of a classic S&P day where, what's the saying? There's, it leaves no stops left untouched. And then after 10:30 European close, you kind of had the big fade. Again, kind of normal, and then this little pop, and this was kind of a normal day, I would say. And the easier trades are before 10:30, and after this, I mean, if you sell some call credit spreads, great, or something like that. But you get kind of some weird moves. And then from there, if we want to kind of step back a smidge. So the 2-minute charts, you can see a lot of course, gyrations in there, and the real main thing about day trading is if you make your money in the morning, don't piss it away in the afternoon. And a lot of that is understanding that the morning moves are essentially cleaner. The afternoon moves, you got less volume, you got a little bit more back and forth, but also in the afternoon, psychologically, you're becoming impatient. If you're impatient, you essentially make errors because you're dying to do something. You got the dopamine, so you want to try to replicate that and do another trade, even though it may not have anything to do with what's going on in the markets and a lot more to do with what's going on, inside your head or heart or wherever, emotions come from. And so it's just kind of being mindful of that. So make your money, and then, making money is easy, keeping it is the game. And then, and that's really a good goal. Another thing that's happening here a lot, this is the 30-minute chart. This blue line is the 5-period exponential moving average off of the daily chart. We spend a lot, we test that almost every day in uptrends and downtrends. So if we're too far away from it, look for a move up to it. And then look for another move up to it. And so that's how you get a series of, and then as price falls, the 5 EMA falls, and that's how you get your series of lower lows and lower highs. And then right now, there are cycle lows in place, about Feb 23rd, give or take. I always joke with cycles, 78% of the time, they work 100% of the time. But generally when I see something like that, I kind of think of it as, okay, we're likely not going to explode higher here and make new highs. We'll kind of just be, farting around here, and let's get through that and then see what happens. All right, so one of the things we've been talking about recently is kind of ideal squeezes and where to get them, or when to get into them. So this is TLT. There is no ideal squeeze right here. What I wanted to show you, this is the Squeeze Pro, and then you got the Squeeze Ultra. What I wanted to show you here, just kind of the key moving averages, and then these are just your basic 3.0 Keltner channels, okay? So let's keep that in mind. And then what we want to do is we want to find stocks that are in an ideal squeeze. Now, scanners and things like that are great. Part of what we've been doing here is we built out this kind of radar screen. This is something I've used in TradeStation for 20 years, but it's actually really hard to replicate in TradingView or Thinkorswim or anything like that. So what we did is we built an online version of this, and we essentially curate the list of stocks that are in here. So there's no junk stocks in here. It's about 800 different stocks. And then what you can do is just say like, okay, here's the symbol. You got Ethereum, dollar, here's the Qs, and what's going on. The squeeze is over. So here the squeeze is over. Here there's a squeeze starting, but it's not ideal, okay? There's some squeezes starting, they're not ideal. The moving averages are mixed. We're 97% within our 52-week range, all the things there. And so as you go along here, it's got all the things. Key sectors, XLK, stuff like that. Believe it or not, right now in the semis, of all the sectors, the semis right now do have ideal squeezes. We'll take a look at those, even though the tech sector's been so weak. And then we've got about 800 stocks. So you got the usual suspects, the top 10, top 20 in tech, finance, healthcare, et cetera, et cetera. But then we also have up and coming growth stocks, which are stocks that meet both fundamental and criteria and technical criteria. Now this is a lot, right? So what you can do is you can come over here and just say, all right, you know what? I just want to see ideal squeezes, and I want to see them that are within 85% of their 52-week range. That means they're 15% from new 52-week highs. And I also like the RS compared to the SPX. Anything over 70 tends to have a higher probability of success. So let's put that at 85. And now that gives us a hit list of all the stocks out there on planet Earth, at least on the US stock exchanges. These are the only ones that are set up like that. So let's look at SMH. So we come over here, we'll type in SMH, and we can say, okay, great. Is there an ideal squeeze? Okay, what is an ideal squeeze? Just simply means when there's up arrows that the ideal conditions for a move to the upside have been met. Okay, it doesn't happen all the time, but when it does, it essentially means you have the highest probability of success to the upside. Then from there, I've got the basic 8, 13, 21 EMAs, and I'm fine at buying at either one of those. If the stock's been quiet, they bunch together, and if not, and then so one question is where not to buy. If we're at 3 ATR, that's what this is. I'm not going to buy it right there because the odds are from there you kind of come back to the mean. And then in terms of what's a target, that's also a pretty good target. So right now on SMH, even though, the cycle lows are coming up and stuff like that, I'm fine. I would go out, buy calls 30 days out from here, slightly in the money. If you want to do it as a spread, that's fine. And let this play out. And that's kind of the whole idea with this stuff is you let it play out. And then we can kind of come over and if SMH is in that squeeze, then other ones are other ones in the individual stocks from that sector would obviously be in squeezes too. So you have Micron. If you're looking at individual stocks, Micron, LRCX, AMAT, and MTSI. So what I like about this is that SMH looks good with ideal squeeze, but we also got to remember, hey, there's Nvidia in there and everything like that. So maybe these individual stocks will act a little better than the sector itself. Maybe Nvidia, if it can't get anything going, is going to weigh that down a smidge. It doesn't have to, right? But it may, and I think that's worth considering. So if we look at, like, say, LRCX, pretty solid. We got ideal conditions for a squeeze here. We're at entry points, and essentially an upside target would be up to that kind of $260 level. Okay, it looks pretty solid. If we look at Micron Technologies, same thing. You got ideal squeezes. Again, the conditions are ripe for a long, and you have a good risk to reward. It's a really good risk to reward. I mean, your downside, it's like, okay, you get your stop loss, which is about a third of what the potential target is, which makes a lot of sense. And then the other one here is AMAT. And AMAT here also looks good, but you can see if I'm looking at it right now, it's not the ideal time to entry, and we just want to be a little patient. Possibly that it already did its move, right? That could certainly be it as well. But I'd want to see if we get another shot down there. Right, so if this is the first time you're seeing all this, feel free to watch the replay. I did an hour-and-a-half kind of webinar training on this, and you should be able to see a link for the replay, I'm sure, on this email somewhere. But this is the biggest innovation I've done in timing in the last 7 years. I'm pretty excited about it. It's something I can show my wife and kids, and for the first time in my entire life, I don't have to explain something that I intuitively understand but can't explain the intuition to them because they haven't been trading for 30 years. And so I'm super excited about that, and also to share it with everybody else. All right, you guys have a good one, and gals, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.